A very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be considering the possibility of Euro USD rising to the levels of 1.14. For past almost 2 weeks, the Euro USD has been range bound, and on the lower side, it has been finding good support around 1.12 zone. And after this due consolidation, the possibility is emerging that it might pick up on the upper side and might continue the recent rise which we are seeing in last two trading sessions. Even in today's trading session, there is some support coming in around 1.125 zone, and we will see if we can exploit this situation to our advantage. If we consider the trading context for the day, earlier in the day we got the Reserve Bank of Australia's interest rate decision, and here in its monetary policy announcement, as expected, the RBA left interest rates unchanged at 0.25%, and it has of course expressed concerns surrounding the recent state of Australia's economy, and given the backdrop that there is the biggest economic contraction since 1930s, the RBA is ready to provide all sort of monetary policy support to for the recovery of the Australia's economy. And on the inflation side, the RBA is not really concerned, and it is ready to continue with its monetary policy easing, and it also stands ready to purchase bonds and even scale it up if the need be to target the yields for 3-year Australian government securities. So on that front, this is what the RBA was expected to do, and we really didn't get any surprise monetary policy announcement in today's meeting. During the European trading session, we got the European Commission's GDP forecast, and here European Commission has lowered its GDP forecast, the targets for 2020 and 2021, amidst the backdrop of many of the European countries being unable to lift the lockdown which have been imposed because of the coronavirus outbreak. And earlier assumptions of the European Commission were that most of the countries would be able to lift the restrictions, and the economies would get back to the normalcy sooner, but that's not really happening. And the lockdown restrictions which are being loosened are kind of not evenly spread, and some countries are better off while some of the countries are proving to be laggard, and because of that the European Commission has lowered its forecast. Now it is expecting the GDP to contract 8.7% for 2020, and the next year it is expecting a pickup in the economic activity, and as a result of that, the euro area economy might expand by 6.1%, and both these forecasts are lower compared to the prior estimates, where the prior estimates were of 7.7% contraction for 2020 and 6.3% expansion for the 2020, and now those estimates stands revised. Moving on to the technical outlook, we will cover the Euro USD, and then we will also see the USD JPY. Let's start with the Euro USD's technical outlook. This is the daily time frame chart, and after consolidating closer to 1.12, the Euro USD is picking up pace, and even in today's session, as I said earlier as well, it has found good buying momentum closer to 1.125 zone, and it has been able to cross above 1.130. As I was getting ready to record, I saw the Euro USD was hovering close to 1.128. So from the upper side, there have been some 20% drop, but still things are looking good. And if it is able to hold on to these gains, then I think most probably we will see the momentum which we are seeing in today's session will likely to persist, and Maybe in next few trading sessions by the end of the week, we might see Euro USD climbing back to its recent swing high closer to 1.14 zone. And if that is going to happen, I think we need to figure out what are the optimum levels for us to get involved. And if we consider the 4 hourly chart, the regression curve still remains bent on the bearish side, so we have to be watchful. And I think on the lower side, we will now have to rely on the central pivot point, which is there around 1.125. And I think as long as this support zone is intact, unless and until there is a break on the lower side, we can continue to look for buying opportunities. So we have to rely on this central pivot point zone. And then, as I said, we can even target the first resistance on the upper side, which is also our target for the immediate trading opportunity here. And if there is a break below this prior swing low, which is there around 1.122, then of course we will have to shell our idea and simply sit on the sidelines for clarity to emerge. But as the things stand, I think after due consolidation, we will see this regression curve also flattening to some extent as the price action has moved to the upper band of this regression curve, and because of that, this inclination, which is right now on the bearish side, is likely to subside, and after due flattening of the curve, we might even see it picking up on the upper side. But till then, we have to rely on these confluence of 50, 100 and 200 SMAs, which are there starting from 1.124 to 1.28, 1.286 zone. So here we have this confluence of three SMAs, and on the lower side we also have this lower band of this upward sloping price channel, which can be formed simply by joining the recent higher highs and higher lows. So that's fairly simple. And as you can see from the price action as well, that's the zone where the Euro USD found support in today's session. So I feel unless and until we see a further break on the lower side below these immediate days lows, we can even in today's session continue to look for buying opportunity, and any buying opportunity in the price band of 1.127 to 1.128 should be good enough. And right now the price is not really far off from that zone, so I think even in today's session we might get this opportunity. And as I said, we need to keep the stop loss just little below this immediate swing low, which is there around 1.122. So you have to take a risk of around 50 to 60 pips, and with that we can target on the higher side around 100 pips, so you will get the risk reward ratio of 1 is to 2. And you can even continue to hold on to the position towards 1.12 sorry 1.14. In that scenario, the risk reward ratio would be a little better than the 1.1 is to 2. And of course the stop loss and the target prices are wide, but then given the volatility, I feel that's what we can do. And of course, if you are going to trade this opportunity, then of course you will need to keep the lot size lower so that you don't happen to lose too much money in case our assumptions, our anticipations go wrong. And in trading you can always go wrong, so you have to be watchful on that count as well. Now moving on to the USD JPY. USD JPY is also looking promising on the lower side, and we will see what are the technicals telling us. Here, the Euro USD has been consolidating closer to 107.5 zone for last 2 to 3 trading session, and on the lower side it has indeed found some support. And because of that, I think we can here also continue to look for long opportunities. And if you consider these prior swing lows, then these are identical swing lows, and these are kind of indicative of a double bottom kind of formation. So unless and until there is a break below yesterday's swing low, I would prefer to stay on the long side of the trade for the USD JPY. And for that we will be able to target the area close to 109 in coming sessions. If you consider the 4 hourly chart, the things are not really exactly promising. But as we can see, we have this central pivot point of this month's pivot point series around 108 zone, and here for last 3 to 4 trading sessions, the USD has been consolidating below that, and unless and until there is a break below this immediate swing low, we can now target the price zone above this immediate resistance, and for that we can observe some good consolidation which has already taken place around this 107.5 zone, and that has improved our possibility of ending up on the profitable side of this trade. Even the regression curve has now slowly bent on the upside after this consolidation, which has lasted almost 3 weeks. And as I said, that is also contributing to the confidence which we are having now in this trade. If you consider the hourly chart, in yesterday's trading session, we saw this fresh swing low being made prior below prior swing lows. But then from those levels, we also saw equally sharp revival, and these gains of almost 60 pips came in span of couple of hours. And from those highs, now again we are seeing some consolidation, some correction, and the price action has drifted lower towards 107.6 zone. So here on the lower side we have confluence of 50, 100 and 200 SMA concentrated around 107.5 zone, and I think that is the price zone you should target for. And as I said, unless and until there is a fresh break below its immediate swing low around 107.20, this trade looks good enough for me. So I would say any buying opportunity in the price band of 107.5 to 107.6 should be lapped up with a stop loss coming in around 107.20, and for a risk of around 30 to 40 pips on the lower side, we can target around 80 pips on the higher side, or even 80 to 100 pips, and our next target should be around 108.5, so that will give us a target of almost 90 to 100 pips. And I think as I said, the things are pointing in a bullish move on the upper side, and that increases our chances of ending up making money instead of losing money. Of course, there is nothing certain, but you can take calculated risk, and here the bets are indeed looking promising for our side, the long side, in USD So that's it from my side in today's trading session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.